Hey all, welcome to ShareTrek. This is Raj here. Well guys, I'm burning the midnight oil because there are so many results coming up and I want to make a video on all of our genomic shares for their Q2 results. So I've been a little bit late behind schedule with Beam Therapeutics. We had Beam Therapeutics report its Q2 2023 results on 8th of August. And today I want to give you my take on Beam earnings report. So let's get started. Welcome back. The market rewarded the Editas stock by pushing up the share price to recover half of what it lost the day before the results, and promptly a day after the results, the share price fell a little bit. It opened higher than yesterday, the day of the result, and then it came down. So let me first take you to the price chart to show the market reaction and see technical clues before we dive into the pipeline updates and financials. So I'm going to follow the same structure for all the companies that we review. I'll try to keep it in the same way so that you get used to a particular system of reviewing companies. So here we are in the TradingView platform, and I'm looking at the chart for Beam Therapeutics, and each of these candles is a one-day candle. And as you can see here, there has been a trend reversal of sorts because we went up yesterday and we are still up today. We have to see what happens tomorrow. There seems to be some kind of support out here at around somewhere around 25.52, which you can see here. This seems to be some kind of a support. We also have a resistance here at around 29.79. And if you look at what was reported, we have earnings which says that EPS was above expectations by around 24.19%. That's a very, very strong performance. However, the estimate was a loss of $1.42, whereas what was reported was a loss of $1.08. So it was better than expected, but it was a loss all said and done. It's not yet break even. So if you had to look at the revenue side, revenue came 16.15% above expectations. And friends, again, for all our genomic companies which do not have a product in the market that gives consistent revenue, most of the revenue models are likely to get it wrong. Anyway, in this case, it was a pleasant surprise. The estimate was 17.32 million, whereas we reported 20.116 million. So it came up by 16.15% positive surprise. So that's what we had there. And as you can see, our momentum was very low and continues to be low. MACD is inching towards the signal line to cross over to the bullish side. It all remains on the market environment, I believe, because we don't have any milestones coming up for Beam Therapeutics. It's all in the next year. So most eyes in the market are on CRISPR Therapeutics and Bluebird, and probably Ginkgo Bioworks. These are the places where the action is happening, and many people in genomic investment are focused in those areas. That's my personal opinion. Now let's take a look at the pipeline updates. So I'm going to compare the Q1 progress, whatever they reported, along with Q2 progress, so that we can get an idea of where they are overall. So first, let us start off with the hematology portfolios. The first one here is Beam 101, which is for sickle cell disease. In Q1, they said enrollment was in progress for the Sentinel cohort with the first patient withdrawn. Additional patients were undergoing screening for mobilization and treatment. And now in Q2, what they are saying is consent for additional patient continues, aiming to fill the Sentinel cohort and initiate the expansion cohort. Treatment will occur sequentially for the first 3 patients and in parallel for subsequent patients, which means the progress is very glacial. It's going slow. I don't know if it's unavoidable, but it does look slow to me as an investor. Now let's turn our attention to the immuno-oncology portfolio, where we have Beam 201, which is a CAR-T therapy. In Q1, they said enrollment was anticipated to begin in mid-2023. And right now in Q2, we are already in August, and they are saying that multiple sites are open for enrollment and the first patient is expected to be dosed in Q3. So already we are behind schedule, in my opinion. Next, let us look at genetic disease in vivo portfolio, in which we have Beam 301 and Beam 302. In Q1, they said regulatory application for Beam 301 was anticipated by late 2023 or early 2024, followed by Beam 302 in early 2024. And now in Q2, they are saying regulatory application for Beam 302 is expected in Q1 2024, followed by Beam 301 in second half of 2024. So 301 is in the second half of 2024. And I don't see much of a change out there overall, nothing great to report home about. And then we turn our attention to North Carolina facility. In Q1, they said expected initiation of CGMP operations in 2023. And in Q2, they are saying plan to enable CGMP manufacturing for both autologous and cell products for sickle cell programs and LNP products for Beam 302 and Beam 301. So that's what they are saying out here, which means they are still in the planning stage. So initiation typically comes before planning. So I think they are making some progress out here, but we don't know what's going to happen next. And next, let us look at the financials. So I've got the table as always. Please look at the table while I explain my analysis. So I'm going to put up the table in the screen right now. Well, here we have the table. I have put Q1 and Q2 results out there so that we can compare. I also put a very simple column called increase or decrease, so you can at a glance see what's happening out there. So cash position stability is what I'm liking out here. Cash has remained stable. The company maintained a stable cash position of 1.1 billion at the end of both Q1 and Q2 2023, indicating consistent financial management. Next, let's look at the R&D investments. Research and development expenses decreased from Q1 to Q2, suggesting potential cost control efforts. And if you see, the difference is not that much, so I'm not too concerned about it. But any amount saved is additional to the cash runway, so it's a good thing. General and administrative expenses increased slightly in Q2, which could be attributed to administrative growth or certain investments in operational efficiency. We do not know what exactly it is, but there has been a slight increase out there. It's not significant, but given that they have maintained their cash position, I'm not that worried. Now let us look at net loss. They have been able to reduce their net loss, and that's a positive thing, which could be a sign of improved cost management or potentially increased revenue, one of those two things. And when we look at the cash runway, Beam's statement about the cash runway extending into 2025 indicates management's confidence in the company's financial health and the ability to fund operations and development without immediate capital needs. And continued pipeline progress is something that we are seeing, even though it's too slow for my taste. The consistent funding directed towards key milestones for Beam 101, Beam 201, Beam 301, and Beam 302, as well as ongoing investment in platform advancement and manufacturing capabilities, suggests focused efforts on advancing the company's production pipeline and technological capabilities. As they say, slow and steady wins the race. I think they are doing everything in a deliberate and calculated manner. So it needs a little patience to be a Beam investor. And the potential for profitability is there because the reduction in net loss despite ongoing R&D and general and administrative investments suggests that the company is working towards achieving profitability or at least improving its financial performance over time. This could also be because of the revenues that are coming in through some other activities. And overall, I think the company position looks pretty good. And what I would like to say is that the stability in cash position and the extended cash runway may positively impact investor sentiment. So anyone who is looking at the Beam balance sheet and their quarterly reports would not feel anxiety. They would say, okay, I'm a patient investor. I can stay for a long term. This is a predictable and steady company. That's the kind of feeling they would get. It will be calming to the nerves. And I think the company's ability to execute its strategic plans without immediate financial concerns is a attractive aspect of this company. And external factors such as market competition, regulatory developments, and potential breakthroughs in gene editing technology could significantly influence Beam's financial performance and future outlook. Here is what my personal opinion is. I think in the long run, Beam will be a great company. Its ability to retain cash balance is impressive. However, I have limited capital to invest and limited allocation to genomics from my overall capital. I would rather put the money in CRISPR with a payoff expected in Q1 2024 at the latest. I would still have an opportunity later to get back into Beam before it monetizes its first therapy. Given that Beam is at an all-time low with more IP than before, I would say that if it were not for the bad economic environment, Beam could be priced higher at this point of time. If my portfolio allowed me to have extra money, I would definitely put it in Beam for the long term. And now here is my question for the day. Beam has a resistance at 29.41. Keeping that in mind, my question is, do you think Beam will cross 29.42 before the end of Q4 2023? You can answer with just a yes or no in the comment section, and it would help me understand where you're coming from. That's all for now. I'll be back with the next video soon. Bye for now.